Welcome to The Economy Magazine. I'm Benjamin Chong Alfares with the top reports from the global economy. Today we cover Palestinian Authority residents move to boycott Israeli goods, Israeli patronage of Arab-owned businesses drops, and Saudi Arabia prepares to open to foreign investors. First, the headlines. U.S. stocks closed higher on Wednesday after minutes from the Federal Reserve's July meeting showed the central bank remains accommodative. The Dow and S&P posted gains for a third straight day as the Fed indicated it was in no rush to raise interest rates. The S&P 500 came close to a record close, finishing within 5 points of an all-time intraday high set in July. All eyes are now on the annual meeting of the top central bankers in Jackson Hole, Wyoming, where Fed Chair Janet Yellen is expected to express concern about slack in the labor market. The UNHCR launched a major aid operation to offer relief to 500,000 Iraqis forced to flee their homes by the Islamic State offensive in northern Iraq. A four-day airlift of tents and other goods began on Wednesday to Erbil, followed by road convoys and sea shipments over the next 10 days. The UNHCR estimates that a total of 1.2 million have fled their homes across Iraq this year. The initial aid shipments will contain 3,300 tents and 20,000 plastic sheets for shelter, 18,500 kitchen sets, and 16,500 jerry cans.
The needs are absolutely massive right now. We've had 1.2 million people displaced in this country since January, hundreds of thousands just in the last few weeks alone. So in the next 10 days, we're going to be bringing in some 2,500 tons of aid, sending it out to those in need. And again, they are in need because we see it every day. People who are living in churches, mosques, by the side of the road, in schools, in unfinished buildings.
African governments are on pace to issue a record amount of bonds in 2014 for a second consecutive year, but global investors' appetite for African bonds may be testing its limit. Bond prices in countries ranging from Gabon to Kenya to Ivory Coast have dipped after hitting near record highs at the start of the month. Mutual funds and exchange-traded funds are net sellers of African bonds this month through August 13th. The pullback comes as money managers reassess their riskiest bets on the view that central bank policy will draw cash back to the developed world. Stronger U.S. economic data is widely expected to lead to an interest rate increase that could hit bond prices across the board next year. Brazil made its second multi-billion-dollar injection into the banking system in less than a month to boost the economy ahead of presidential elections. The central bank on Wednesday eased rules on reserve requirements, freeing up about $4.5 billion for new lending. 3 weeks ago, it injected $20 billion into the economy by easing compulsory deposit rules and changing the risk calculation of some loans. The bank hopes the measures will improve small businesses' access to credit and strengthen foreign trade. But high inflation and recession in the first half of the year continue to haunt President Dilma Rousseff as she seeks another term in office. Venezuelan President Nicolás Maduro ordered the installation of fingerprinting machines in all public and private commercial centers to counter contraband. Maduro said the purpose of the biometric system is to avoid people buying large quantities of food for reselling on the black market or smuggling to Colombia. Maduro's strict critics say Venezuela's socialist system is on the brink of collapse and that it should distance itself from price controls. Maduro earlier announced a controversial secure food supply card, which limits purchases in state-run stores and was denounced by the opposition as a further effort to Cubanize the country.
In second place, the establishment of biometric system in all systems of distribution, public and private commercial centers will be similar to how its fingerprints were captured for the electronic system, the anti-fraud blessing.
Residents under the Palestinian Authority are expressing their support for Gaza and the war against the Jewish state by boycotting Israeli products. But while the political effort has forced an increase in local manufacturing in the Palestinian Authority, the drop in exports is hardly felt in Israel. More in this report.
The boycott of Israeli products is gaining ground in the West Bank. While Operation Protective Edge continues, leading to hundreds of civilian casualties in Gaza, supermarkets in the West Bank decided to mark Israeli products or even remove them from their shelves, an unprecedented action since the first Intifada.
We got rid of all Israeli products from our supermarket. They were replaced by local substitutes.
To motivate Palestinian customers, a campaign was launched on social networks, TV, and in the supermarkets, also introducing applications created to assist consumers to recognize Israeli products and boycott them.
قاطع المنتج الإسرائيلي ادعم المنتج الفلسطيني الشكل اللي بتحطه على المنتج هذا بروح رصاصة في حي شجاعية.
Activists covered Israeli products with stickers proclaiming boycott Israel. The campaign is affecting consumers in Ramallah.
These days I change my habits. Because of the Israeli war against Gaza, we stopped buying any Israeli product. Now we are only buying Palestinian product. This is not only my decision, it's a family decision.
But as the economic ties between the West Bank and Israel are exceptionally strong, 75% of fruits and vegetables come from Israel and 60% of dairy products, a dependence that will not disappear overnight but can benefit local markets. West Bank companies have boosted production in recent weeks.
I can tell you it's around 30 to 40% increase in production. In our factory, we created new jobs, working extra hours. After the boycott, I think our market share is more than 60 to 65%.
Annual exports to the Palestinian Authority reach about 5 billion shekels per year, nearly a fifth of it in food and dairy produce. And many Israeli food manufacturers will take a hit should this ban expand and proceed.
Hamas's latest escalation with Israel has drawn clear lines between allies and enemies, and given the interconnectedness of the Arab citizens of Israel, Gaza, and the Palestinian Authority, their Jewish patronage has dropped dramatically. More in the following report.
I disconnected the fridge from the electricity. The rooms are empty. There's no work. It's painful. The air, the view, everything is empty, and in the season, the summer.
Since Operation Protective Edge broke, Samech Ganen, owner and manager of this inn in the Druze village of Beit Jan, is faced with a wave of cancellations and empty guest rooms.
They said, a Druze village? We are not interested. They'll not come because we speak Arabic. It's that simple.
Ganem offered all rooms for free for residents from the south, but nobody came. Samach and other tourist destination owners are bearing both the financial cost and the insult, even as their relatives are fighting in Israeli forces.
My cousin was injured in Gaza and is now in hospital, and we don't know what's going to happen with him.
Druze villages are not the only ones suffering. Palestinian towns report significant decline in earnings. Business in Nazareth and Baqa al-Gharbia reported a 75% earnings drop. Jewish customers are also avoiding this branch of the King store in Kalantzua.
There was nearly a 40% drop of Jewish customers in this supermarket. But on the other hand, there was a 60% increase in Arab customers. The Jews are afraid to come here, and Arabs are afraid to go to Jewish stores.
In July, following a protest strike in the Arab sector, Foreign Minister Avigdor Lieberman called to boycott Arab businesses. Demonstrations against Operation Protective Edge, which took place in many Arab cities, also deterred some of the Jewish population which used to shop there.
The Arab population is paying the price of making a stand, but the strength of the disconnect in the last month is something we haven't experienced before.
I think this call is extreme and racist and has no place in the Jewish-Arab financial partnership in the state of Israel. I think it's causing much damage.
And back to Beit Jan in Samachzin, where Tal and Michal Zahor, a mother and a daughter from Tivon, came to support the business and gave us their own explanation to the situation.
What guides us a lot in this region is fear. And the Druze and the Arabs, it all becomes one big mix of fear.
I feel we got carried away in something very strong of hate towards what is different from you.
In the popular El Babor restaurant in El Fahim, this July will be remembered as particularly difficult, with earnings declining by nearly 50%. But owner Hussam Abbas believes this time, as before, the wave will pass and customers will return.
Living together means dealing with each other, but partnership, that is true coexistence between Arabs and Jews.
Saudi Arabia, the land of Islam's two holiest places, has long based its wealth on oil and gas. But that is about to change as it prepares to open up to foreign investors. Here's the story.
Saudi Arabia is preparing to open up to foreign investors. Keen to reduce its dependency on oil, the Middle Eastern country wants to increase its international value. So far, only 6 countries in the Persian Gulf have access to the Saudi Stock Exchange. This is the first big change and a sign of openness to the international market since a major crash hit this exchange in 2006.
I advise foreign investors to make long-term investments, to take the rewarding dividends and never rush for a quick profit. God willing, the Saudi market is heading towards an unexpected breakthrough.
With expected growth of 4.2% over this year, the kingdom may quickly become an attractive place for foreign investors. While domestic firms are expanding, given the fact that foreigners owned only 1.2% of the market through swaps, there will be a major influx of foreign money when the gates do open in 2015. Fund managers estimate that Saudi Arabia could attract $50 billion in coming years.
In terms of my portfolio, with the market opening to foreigners, now my portfolio is divided into 3 parts. One for quick speculation, another for a 15-day speculation, and the last for investment. Once foreigners access the market, I will liquidate half my portfolio and see where foreigners are heading, in which companies they're investing, and then I will re-enter the market.
Anxious to get closer to world economic powers like the United States, Saudi Arabia could play a major role in the near future of international capital flow. This new market is promising. The Central Stock Index jumped 8% in the week since the market opening announcement was made. But, as has happened in Qatar and the United Arab Emirates, heavy buying by locals can lead to a slump if foreign investors balk at paying inflated prices.
We're joined now by investment analyst Sam Chester from Clarity Capital. Mr. Chester.
Yep.
Thanks for joining us again.
Thank you.
So we just saw this report regarding Saudi Arabia opening up to foreign investors. What is behind the Saudis' decision at this point to open their stock exchange?
Well, Saudi Arabia is motivated by 3 factors. 1, they want to attract obviously more international investment. 2, they want to diversify their economy and move away from dependence upon oil revenues. And the 3rd factor is that Saudi Arabia until now has been classified internationally as a frontier market, as a frontier economy, and they want to move toward the classification of being an emerging market. To elaborate on some of these points further, if you look at their economic reform, King Abdullah, the king of Saudi Arabia, he's 90 years old. Over the last few years, the last half decade, he's led a tremendous number of economic reforms in Saudi Arabia. The market, the exchange, which we're talking about being open to foreign investment, was only created in 2007, to give some context. So the economic reforms are moving forward. At the same time, the current market only has 1% of international investors. Currently, it's closed to everyone outside of the Gulf countries. And the final factor is that the market right now is dominated by individual domestic Saudi investors who are highly speculative, and Saudi Arabia wants to move toward more institutional, stable, long-term investors.
Why now? What about the timing? Why is this crucial decision made at this point?
Well, first of all, the writing has been on the wall. To anyone looking at the Saudi market over the last few years, there's been a lot of speculation about this, and this decision has been coming together slowly. Saudi authorities in general are known for moving very slowly, so it doesn't really surprise anyone that the decision has come slowly. That said, there are really 2 key factors. There's a liquidity context and a regional context. The liquidity context is that Saudi Arabia, if they open their market, is poised to attract potentially close to 50 billion of additional foreign capital, which is very attractive. But I think I would really emphasize the regional context here. Saudi Arabia has seen just 2 months ago that 2 of its neighbors, Qatar and the UAE, the United Arab Emirates, composing of Dubai and Abu Dhabi, both Qatar and the UAE were both given emerging market status by international financial authorities, which has lifted them to another perspective and position in terms of international financial markets. Saudi Arabia, which is a more regulated market than either of those countries, and a much bigger market than either of those countries, is lagging behind. And they don't see why they should continue to be lagging behind, particularly when the opportunity to become an emerging market is so attractive.
Okay, what comes next then?
I think several decisions have to be made by Saudi authorities, hopefully soon, if they indeed plan on opening their market by 2015, next year. First of all, they have to decide who are they going to allow to invest. Are individual foreign investors going to be allowed, or only institutional investors? Secondly, perhaps most importantly, timing is key. Right now, all they're saying, the authorities, is that sometime next year. They have to decide exactly when. And finally, they have to decide how much investment will foreign investors be allowed in the market.
Okay, just to close off, what are the key investment opportunities for foreign investors here?
Well, first of all, foreign investors can't avoid the Saudi market. It's a huge market. It's been growing over 46% in the last 2 years. I think what is really attractive for international investors are there are some key blue chip investments, huge petrochemical companies, oil companies, other companies, and this is very attractive for foreign investors.
Well, Mr. Sam Chester from Clarity Capital, thank you very much for joining us. That's a wrap for us at The Economy Magazine. I'm Benjamin Chong-Faris. Follow me on Twitter at Chong-Faris, and continue to follow us also online. Thank you very much.